Hello, everyone, and welcome, Warren. Thanks very much for being here.
Good to be here.
So, Warren's from Vanguard, and Malvern, Pennsylvania is quite a ways away. It's probably getting from there to San Francisco is roughly the same as driving across campus at Vanguard's offices. It's a pretty big place. By way of brief introduction, my name is Greg Signorella. I'm head of sales at Onera. Like many of you here, I came from the TradFi world, spent 20 years in capital markets, in fixed income predominantly, sales and trading, and made the change recently to work for Ami Ben David, and I just really wanted to be a part of this growing ecosystem and be part of the tokenization of real-world assets. I found it very exciting. For Warren, I'm going to turn it over to you, but just for a moment before I actually do so, let me actually put Vanguard in context just to set the table for the conversation. So Vanguard, as you well know, was founded in 1975. There are 432 funds. Now, this is all coming from the website, so I'm not making it up. So 432 funds. There are over 30 million investors, which, to put it into context, not that it makes much of a difference, but if you put all of them into a state, one of the states, it would be the second largest U.S. state. About 20,000 employees. And if we take the assets under management, which is approximately $8 trillion, and put it into a nominal GDP comparative bucket, it would be the third largest country in the world. But that's a kind of a useless fact, but I thought it was kind of funny. So anyway, so for Warren, why don't I turn the ball over to you, a brief introduction, and also tell us about the group that you founded, the Vanguard FinTech Ventures. So fill us in on that.
Sure, no, great. Thanks for inviting me. Good to be here for this one. So yeah, if you think about the company, I've been here for 10 years at Vanguard. The team that I lead, one of the problems that the innovator's dilemma, one of the problems with a very successful firm is you might get caught by disruptive technology. One of the interesting parts about the Vanguard mission is that it's always been sort of focused on lowering the cost, and there's the whole Vanguard effect, which was why asset management is less expensive today than it was 20 years ago, 30 years ago. But also focusing on a retail investor. So that's a distinction. So most of the work we would do is focusing on things that could make it better and cheaper for the end investor. That makes our mission a little different, which is why digital assets and blockchain has been one of the areas of focus for us, is because the way the markets work themselves matters. So if you think about those $8 trillion worth of assets, a tiny, tiny, tiny fraction of cost shaved off in the markets, which would hopefully affect all those assets, has a huge payoff to our investors. And our compensation structure is a little unusual too, because we do get compensated in some form or fashion relative to how much we can pass on savings to our end investors. So that's kind of the context for that. It goes back to the numbers you provided. Vanguard FinTech Ventures was out there because we are in Malvern, Pennsylvania, which nobody of you probably knows where that is. I didn't know where it was until I started working at Vanguard. It's near Philly. That's a start. But we don't have, and we did not have, a technology-focused strategy in the investment shop. Technology was seen as a necessary thing to help run the business. It wasn't necessarily an enabler. So in order to speed that up, we decided it would be important to find a way to partner with the real technology firms, mostly the speedboats, as they talked about earlier in the morning, to help us figure out how to go faster. And so that's kind of what we've been doing. That's what our team does. We partner with small firms as well as our institutional players, the exchanges, the custody banks, and so forth, trying to speed up the adoption of emerging technologies that can improve the end investor's experience, which we usually define as more return goes back to the investor. I'll repeat your statements if I need to.
There we go. This thing is
high tech.
Yeah, it's not working. It's not working great, but we'll deal with it. So imagine with the size like Vanguard and trying to maintain that dominant position, it takes quite a bit of innovation, tech innovation, in order to maintain that dominant position, as well as quite a bit of investment. Right? I mean, it takes quite a bit of money to make sure that you all remain, first and foremost. But it's a, similar to what Will was saying when it comes to Wisdom Tree. It's a retail investor-based firm. Mainstream, it's very mainstream. It's a household name, for the most part. So when it comes to this new brave world that we're all moving forward in, right, for tokenization of real-world assets and distribution, We speak a lot about the private markets as they're ripe for this type of innovation, considering there's little to no infrastructure currently. But when it comes to a firm like Vanguard, with the type of mutual funds that you have available, the index funds, typical, by far and large, they are public market type funds. Again, going back to what Will was saying with Wisdom Tree. But now we're also talking, as I said, about the development of private markets. So how is Vanguard looking at that opportunity, considering how large it is? We've been speaking quite a bit about the multi hundreds of trillions of assets that have occupied a world that has virtually no technological infrastructure, and now the opportunity is upon us. So how is Vanguard looking at that opportunity set?
Yeah, so what are the problems that we would like to solve? And we're both an issuer of funds and ETFs, and then we manage the assets. Largely, we manage the passive assets in those funds and ETFs, and we're a distributor through our direct-to-customer. That's part of the original model of the company. Yeah. So we're looking at what are the problems in both sides. Like, what would make it easier or better to manage funds and assets? And again, we have to go with our company philosophy of it's a diversified portfolio that makes sense. We don't offer a gold fund. We don't think that's an investment. We don't think gold is an investment. So you can sort of put caveats around everything I say because of that sort of investment philosophy. So what could we do to add to our portfolios and put them in the existing wrappers, like an ETF or a mutual fund, and make that better? On the flip side, what could we do and the way we engage with our clients to make that distribution process easier? Wisdom Tree with the digital wallet, that's pretty clever. It's an interesting thing to do. For Vanguard, we already have a direct to customer relationship, and they have an iPhone that has a Vanguard app, and they can trade already. So we kind of have to look at those problems separately, and we're focusing mostly on what could we do in the portfolio side. So as you're talking about, public markets are amazing, but private markets are bigger. Some of the things that exist in the private markets, like illiquidity premium or the fact that you can't trade very easily, actually is one of the reasons it's an interesting investment idea. So we're at the stage where we believe in the technology. Some of the problems that we think, we're going to talk about some of the hurdles, I think, later on, but some of the problems we feel like we've solved, so now we're focusing on that business idea. And really, that's a success for us. We've been doing this for about 8 years in the blockchain space, and it took a long time, but the fact is we're having business discussions. We're no longer trying to have a technology discussion. We don't ask, can it be done, or should it be done, or why, but now we're thinking about, okay, it can be done. Do we want to do it?
Right, and it's one of the things I love about Vanguard. Going through the numbers that I discussed a moment ago, the type of innovation that we're talking about at this conference, Vanguard doesn't necessarily need to forge ahead. You're already a dominant position, top 2 asset manager in the world, and it's almost like steering an aircraft carrier, right? To try to get in the direction you want to go. But to engage in this level of innovation in the early days that we are is quite inspiring, right? I mean, so therefore it takes quite a bit for senior management to recognize that rather than following the path trailed by others, you want to be an early adopter. You want to drive the future of this market. And the impact that you can have is actually quite material. So when we talk about the private markets, is there anything in particular that Vanguard is looking at, or is it anything in the private market space that is eligible for tokenization? You're just going to be responsive to the investor base that is interested in these products.
Yeah, I think there's some press in the room. So there are some things that we're interested in that we don't want to talk about publicly, but just generally you'd say, what did the index fund do a long, long time ago when Vanguard's first offered it? First, we weren't the first to offer an index fund, but we were the most successful at the index fund. It made it really easy for an individual investor to get access to the full market exposure. That was something that only sophisticated institutional investors could get. Probably we don't even remember that was the case, but it was impossible. So what do sophisticated institutional investors have access to now? They have access to everything, including private markets. Why are those interesting? Some of the investment characteristics have to do with the problems that we think we want to solve. Like if we want to make private equity fully liquid with daily pricing and all these factors, then maybe it doesn't look like private equity anymore, and maybe we don't want that. Maybe we already have that problem solved. But we would look at things like anything over the counter, first of all, I guess, would be the area we focus on. So that could be bonds, and it could be any private asset, which is effectively an over-the-counter trade. When you don't already have the highly efficient electronic markets and exchanges, and the great thing with exchanges and those types of instruments is now you can short them, you can put derivatives around them, you can trade the derivatives and options on exchanges. So you get this really efficient, highly effective market, and in the private assets, they're nowhere close to that. We think it's inevitable to a degree, because you all in this room are proving that it's not hard to do from a technological standpoint. But we would say pick the biggest area. And ironically, that's not private equity. It might be private real estate. It could be other things. Pick the biggest one and think about how that could improve an individual client's diversified portfolio. And one of the questions we ask inside is, if it were possible, would we recommend that all clients have private assets in their portfolio, in a diversified portfolio? And the answer is yes. Right. But they don't, so now what are we going to do about it? So that's probably where we're at right now.
Right, I got you. And listen, in our early days of investing, when I was far younger, you used to think about the 60-40 mix, right? Yeah. That's the traditional way that we think about investing. Well, that's been changing quite a bit for quite a long time as well. I mean, it would be at least 10 to 15 years at a minimum, if not longer, that this mentality that alternative investments are available to retail investors. And we hear about it, we read about it all the time in terms of, for the average investor, is it 10%, 15, 25? We certainly know for whether it's high net worth, family offices, pensions, and so on, 50 to 75% is not unusual when it comes to investing in the alternative asset space. But the retail investor has very limited access to that. So in a sense, what Vanguard and other 40 Act fund type firms, what they're doing is really leveling that playing field and creating that democratization that we hear about all the time.
So what's 10% of $8 trillion, right?
Yeah, bingo.
That's a big number. If that were private assets, that's an interesting problem. If we tried to jump on a speedboat with that kind of a number, the speedboat would sink. So some of the things we're trying to do are to solve that problem. Like, okay, let's say we wanted to put in, I didn't say 10% was the number, I just was giving it as a hypothetical.
It's a good number.
It would be huge. Is BlackRock in the room? Somebody from BlackRock, I think, once said 50-30-20 is the new 60-40, with 20 being private assets. So.
All right, so we spoke a minute ago, you mentioned obstacles, right? I know the prior panel talked about it as well. So I think we all in this room could we all come to the top three would be pretty easily defined, but let's hear from you. When you think about it from your seat, and as you blaze down this trail, how do you think about the things that are going to limit or slow down the evolution of what we hope to would become the new TradFi?
So if we focus on, all right, there was the whole distribution to end clients, the digital wallet, the idea of tokenizing a fund, and that fund share is a digital token. That's interesting. Not talking about that. We're talking about in the portfolios themselves. So the wrappers, as Wisdom Tree said, like the wrappers are approved. So what do we put in those wrappers? If we can put traditional assets in the wrappers, should the regulator care whether it's a digital token or not? They still do, but we don't think it would. So regulation, I think, would be the top. But I don't think that's as big a hurdle as maybe we perceive. I think that a lot of the problem with regulation has to do with the distribution side, more so than what's in the portfolio. Yeah. Technology problems we see actually two of them. The main one is interoperability. Like there is no standard in blockchain infrastructure. All of the banks that we work with, they all decide they want to have their own version. That's frustrating, but it's the way it is. So we also think that there's a solution to interoperability. It's the idea of fixed and swift applied to blockchain networks, and that's what we liked about Onera. That's why we partnered with you guys on that space. And then the third is just the maturity of the technology. So again, if you had a very mature, well-accepted technology that even the regulators understood, that would be helpful. For us, we look at interoperability as solving that problem. I don't really care as much about the underlying blockchain technology specifically, if we can get to it through a common middle layer. And I think that's the idea that Onera is trying to do with P2P.
Right, P2P, I think the elegance behind it is in its original design. I mean, Anthony before was, we had the GDF panel. I mean, the whole point of it when it first began was, you could take two approaches. You can say, all right, we're a fintech firm and we're going to create our own protocol, and then everyone's going to have to follow suit with what we developed. Well, that's one approach. I don't think it would have been a particularly successful approach. Or you gather the largest institutions in the world, you put them together, and the only positive thing, I don't even want to call it a positive, but the one byproduct of COVID is trying to get these 80 to 90 institutions in a room together. It's like herding cats. It's like near impossible. But when you have the Zoom technology, getting them in a room every 4 to 6 weeks, having all these POCs, these subcommittees, and everyone was leaving their competitive nature, aside, recognizing that if we come together as a group, we're going to create something great in the end. And that's where the FinP2P protocol was born. And it took 2.5 years, and what Onera did was essentially just build a technology to support all that, and that's where we are.
Yeah, we didn't start there. I think it became a problem as things evolved. R3, another example, trying to solve that problem with the banks. And that would probably be a non-technological problem, is if we had digital cash and digital assets, then that market could actually work the way we want it to work. Until we actually have both, it's still difficult, again, on what goes in the portfolio. How do you trade? How do you settle? All those sorts of problems that we want to solve.
Well, I want to channel my Will Peck and say, just do it, right? So we're all going to try to get down this road sooner rather than later. But we are close on time. Do we have one question?
We're running a little bit over.
All right, well, that means one question. All right, that's why I translate that. Anybody have a question for Warren?
They're going to help us keep us on schedule, huh?
All right, well, that's nice of you. Warren, thank you much for your time. I appreciate it. Yeah, thank you.